When we look at the Nasdaq, we look at the S&P 500, there's a few things we need to talk about today. It was a little bit of a down day. Well, we can look at the charts. We can see it was about a 0.3% down day for the S&P 500, the Nasdaq about 0.5. This is one of those days. It's surprising that you're getting more downside actually on something like tech than you were on ES. Now the question is this a pullback or is this actually a bull trap of sorts? Now there's a few fundamental things that happened today and we're going to really start breaking those down. But what I am going to do is ask you like and subscribe because every single day I make videos for you so you are prepared here on the market, as you can see. Also want to let you know the newsletter link is going to be down below. We went over all of this and everything in between, so you know exactly what to expect this week. All the key levels, everything, it's right here. The link is down below and it's on our website, optiondrops.com/newsletter, and you can join and get ahead, and that's actually free. It's all on us. We pay for all of it. You can see we're not advertising anything in here for you as well. So let's get to the video. Now, I want to jump right into the important factors in this video today. Now, what are the main things that we say are going to cause us to have turbulence, cause us to have some potential downside? Okay, inflation numbers, specifically data, which the Fed continues to talk about, and then any sort of bad news regarding the economy, which would come right down to either bank issues or even the debt ceiling. Now, the debt ceiling, we had this notion even from yesterday that it could be postponed, and that news came out right in the after hour, so it wasn't in the video. So if we look today, what did we have and what was reported? Now, we had the Michigan 5-year inflation expectations. It came out at 3.2% expected. It was projected to come out around 2.9. Now, 3.2%, and it was supposed to come down from 3%. So they expected it to drop, but it rose 0.3. So that's not good. Now, what I'm going to tell you here, this is the highest the inflation expectation here from the Michigan 5-year report has been since 2011. So that is pretty high. Now, another big thing that I'm wanting to discuss here is when we look at where we're at and kind of how we're moving as an economy here, okay? You cannot really predict a lot of these numbers. It's going to be very difficult. It really takes almost up until the point of the data being released to have any type of notion. Now, when it comes to me trying to predict anything, I focus more on CPI and PPI, and I can usually tell based on energy numbers because we haven't really seen a disconnect on inflation regarding anything else. Now, that may kind of sound confusing, but basically what I'm saying is inflation isn't really dropping yet, and it really will only start to drop once unemployment rates go higher and wage growth really subsides, which wage growth has subsided, but people aren't losing their jobs yet. And I hate discussing this because it really sounds terrible because it sounds like I want people to lose their jobs, but it's just what happens in the market and how this really works. But yeah, that's kind of what goes on here. Now, this was not really good. And what we saw from the market here is and this is the daily chart. We'll come back to this here in a second. But what we saw from this report, you can see you had some downside, initially in the morning, and then right here at 9 o'clock is really where it started. And you can see once that report came out, that's when you got a decision on moving right to the downside. Now, again, it's important to realize how much should we really move today? Okay, we have to really process where we're at and what's happening. Again, even though it was downside, what's happening here? We look at the chart, 0.5%, not even a full percent on Nasdaq today. Okay, we had some downside, but again, sellers slowed down. They could not hold you down there, and then buyers bought you back up. Now, again, and I don't want to downplay this. I don't want anyone to say, well, Tyler, it seems like you're being a little bit perma-bullish. I think yesterday's video, I kind of highlighted some issues that possibly could happen. And I even said, you're not looking necessarily to start hammering calls at highs. That's not where you make your decision. You either are playing the breakout when you get that volume on top of that breakout, which we had, and we had some good trades there, or you sit on your hands and you try to wait for a retest. And I think today gave you some opportunity. Now, if we go to something like the daily, again, I think it gives you a good example. So this is the Nasdaq, and I'll go into the S&P and the SPY specifically. Now we look at the Nasdaq, again, your ascending triangle, and I put the top of this ascending triangle from your highs here that started basically in May. So May 1st, you kind of double topped here, pushed it a little bit down, and you broke above. Now, giving you a visual of these levels and what happened today at these levels, why this was so important. So you can see our first bounce is right there at those highs. You start to bounce, you get love off that level. You break back down, you get rejected there. So we can see right here the importance and significance of this level, right? You get the one bounce, and then what do you get here? You get the rejection. Okay, that's important to know. Price action here gives you a very good insight into what's happening here. We end up coming back down, buyer step back in, you can't get below 13.3 and you push back up. And this is kind of where we end the day now, kind of chopping into, after hours here. Now, ES and the S&P 500. Now, this is also very interesting what's happening here. Now, I believe you have less, there's no decision on ES, right? We talked about it a lot yesterday about what's really driving ES to stay in this range. That's very important. We went over XLK, we went over Apple, went over Microsoft, and what's driving this market. Okay. Now, when we look at something like ES, it really had almost, I don't want to say it had less downside than the Nasdaq today, but it was less surprising. Honestly, I thought based on this drop today, and I was on live stream this morning, and we're live here every day on the channel at 10:30 a.m. Central. I thought there was a lot of reason and cause for you to drop to 4,100, at least to get the test, right? Like I said, data is your driver. Like if data comes out bad, and we just haven't had bad data in months. So and when I say bad data, I mean as far as, rising CPI, rising PPI, rising inflation expectation, et cetera. That's what I'm talking about as far as pure data, which is what the Fed wants to look at. And so we haven't had that. And so when we finally get that and you drop and then you bounce here, it leads me just to question the strength of what's happening here. And again, you kind of bounce near those local lows. So you make a little bit of a lower wick and you bounce right back up. You come back into 41.38. And again, if you don't have 41.38 marked out on your chart for the ES and the S&P 500, I'm going to tell you right now, you're doing yourself a disservice. It's like the only level right now that's kind of relevant on the S&P. And so when we look here, this is how you're performing. This is how you're acting. So again, I don't love the S&P here. I'm not a huge fan. This is why I urge caution kind of across the board. But what I will say is you rejected, so that doesn't look as good. That's my broad view here on the S&P and the Nasdaq. I have to believe that Nasdaq looks good when you're looking here at something like the 1 day. I'm just saying, in this candle right now, maybe we'll get a different candle. Maybe you drop here in the after hours down a little bit more. Maybe it's possible. But as of now, and I'll have this all posted on Twitter if you follow on there, this is you look decent. Okay. I'm going to tell you that right now. That's my opinion. That's where you're at. That's how you're moving. You want to see a reaction in how you move going forward. Over the weekend, though, there are definitely a few concerns. Primarily what's happening with the debt ceiling. I think the debt ceiling is going to be very telltale, and it's going to either clear the air or it's going to really start to hurt us. When we look at this, the new talk has been postponing of the debt ceiling. And then today we had Yellen make some very strong statements as well, saying that a default would be imminent if we start to postpone and push this off even further. Now, the main issue right now is that we're having this, again, it's like a tug of war between Democrats, Republican. It's really Republicans and McConnell primarily versus Biden. And it's this battle of who's going to give in. And I don't think Republicans are going to do it, whether it be good, whether it be bad. I don't really care. I'm just saying what's going to happen and how the market's going to react. And so the longer this goes on of postponing the debt ceiling, the higher chance and the more volatility you get for downside opportunities, specifically in the short term, right? And so that's really what was happening here. It seems like they're coming to terms and this is going to get resolved sooner than later, but this still will have issues down the road, right? I'm not going to say the debt ceiling gets solved and we move on our merry way and everything's just green pastures and we go to new highs. It's not what I'm saying. Inflation is definitely an issue. I don't think it's going anywhere, but I also think short term resolving the debt ceiling will be bullish. Again, in the short term, like week, 2 week span. You need to understand that. That's my viewpoint. That's what I look at there. And I know you're gonna have questions about that. Now, a few more things around volume and then how we're kind of going forward here. Now, a big thing that I've been talking about, if you've been watching, and the past 3 days, it's been the same thing. This is Bookmap. The link is down below. You can check them out. And as you can see, the blue line here, if you're new, this is basically just represents level 2 data and showing you visualizing the chart on the S&P 500 and showing you where buyers are, where sellers have been, and kind of what happened throughout the day. The blue line down here represents the iceberg orders. So if you're new, this is just breaking it down for you. Iceberg orders are typically individuals who are buying large amounts. It's similar to dark pool, not necessarily dark pool, but I always just say dark pool because it paints a picture in your head that you'd understand. It's usually someone who's buying something, but they don't want to just set a giant, $200 million position order on the S&P futures. They just want to slowly get into it, but it's still coming from the same route, right? So you have to understand that. So what's happening here? You had a sell order here near the beginning of the day, around noon, midday. Now, near the end of the day, again, where you start to see that volume kick back up, and this is ultimately what I've been looking for the past 2 days, is coming in here. Again, you have 1,800, you have 3,300, we have another 3,300 here. Sorry, this is about 5,000. So a lot of big orders coming in near the end of the day. Again, on the ES. So a common theme of what we've been seeing, we've seen some selling, but what I will continue to say is during this area of consolidation where we've been, and if you look at the ES, that's what you have been consolidating sideways in the S&P 500, right? You've seen a lot of buyer stack positions. Okay, we have to understand that. We can see how we move down, and it's very interesting today, more so than the previous days of when we've been pushed down. We can see a lot of buyers just setting up orders, just consistently trying to get in here, and then they really set the line in the sand near 4110, and then as they don't get filled here, they start to really lever in near the end of the day. Very kind of eye-opening. Okay. Now, again, going back, so giving you a visual of ES, again, I don't really know what else to say. You are consolidating in this range. I know people are going to have some different thoughts about that, but that's how you're moving. You're just, since April 1st, March 31st, you've just been moving sideways. Simple as that. It is what it is. That's where we're at now. Okay. And we're, in the middle-ish of this range. Again, 4138, it's like that line in the sand you have to be watching. If you're above 4138, you assume upside. If you're below that level, you assume downside. But again, as you can see here from the 2-hour perspective, sellers, they have all the opportunities. Today's buying pressure was some of the lowest buying pressure that we've had on the market. I say this often, if you don't get that follow through and you continue to just get bought up here, it has to make you lean towards that upside thesis. Again, my opinion, I'm not saying you have to mount. I'm not saying you have to keep going. And my positions here are pretty minimal, which I'll go over that in a second. But overall, that's my viewpoint there. Now, I want to cover my positions. I'm not going to go too heavy into stocks I'm liking or anything along that, but I want to cover VIX and a few other things first. VIX, a lot of people have questions about this. VIX, you're at lows. Okay, it is what it is. You saw a push up here on the daily. Again, wicks and wicks and wicks just trying to hold you down here. Okay, got to understand that. Giving you a visual of where you're at right here, though. Let's really talk about how you're moving here on VIX. If we look back, what happens when we were trading back here back in 2021, 2020? You were pushing to all-time highs. Now, am I saying you have to push to all-time highs? That's not what I'm saying. But I'm saying when VIX is low, typically you don't expect volatility to the downside. Now, when VIX starts to get upward pressure, then obviously you start to, you look to pivot. You look to say, okay, volatility is increasing, take a step back. That's the story here. So these are just common things I'm watching right now. As VIX sits down here, I don't see the selling pressure necessarily ramping up quite yet. Now, the big issue here, there were some red flags today, okay? With the interest, forecast, what happened there? We saw the 2-year yield start to spike again. Okay, the 5-year yield spiking a little bit. The 10-year spiking a little bit. The big thing, though, too, is we started to see a little bit of the inversion moving as well, right? We finally got below 90% here on the inversion, but now you're back at 91, 91.5. Okay, so this is pushing back up. It's important to understand when the inversion is moving, you're basically seeing the smaller time frame yields, the 2, 5, 10, moving up faster than your 30, which again, in a healthy market, upside market, you want to see the 30 moving better than the lower tier yields. Understand that as well. So that is not something that's ideal. But again, going towards inflation data here, I continue to watch, like I said, like a hawk, oil. And oil continues to remain cheap. If oil remains at these low levels, I'm going to tell you right now, I don't see the reality in which inflation rises. If inflation were to rise with oil remaining at these low levels, it would be a major problem. And you would not be late to the party because you'd be able to easily get back into your short position, which is kind of the theme that I've been saying, is that you don't have to rush positions here. It's really just waiting and letting these things set up for yourself. And that's why we've had success here lately. Okay. And so with oil, you're still trending at local lows. It is what it is. We go look at gold. Gold, if you're looking here as well, again, you 1, 2, 3 kind of triple top right now. This is going back to 2020 and your all-time high. This is where you're at here on gold, and you're still retracing. Okay. So gold, I don't think it's a buying opportunity. If you make new highs and hold, then obviously I'm looking for that. Last thing, Bitcoin. Bitcoin does not look good. I've seen a lot of people trying to draw the kind of head and shoulders here. I can kind of see it. I'm not really a fan, but I still can kind of see it. And then you kind of have your neckline like right here that's already breaking. I'd be careful. I'm not really interested in Bitcoin right now, especially not interested in the short side. So again, my opinion, what I've been watching, and that's kind of the broad areas I've been trying to watch. And the last thing I'll cover is DXY. I know you have a question on that. DXY, you're bouncing out of support. I don't think you look good on DXY. I want to say that first, but you are getting a bounce out of here. Now, DXY is worth mentioning. You have been making lower lows. You have since beginning of April. You pushed out of this, but again, you want to see this actually going to continue, or if this is just going to fall right back down through. Again, even though DXY is bouncing, you're not necessarily seeing the worst downside on the market. Understand that. We've kind of gone over risk on, risk off. Biggest viewpoints there. Now, again, 2 trades that I'm in, things I've been watching. Now, Amazon, this is not a new trade. I already got into this trade. You guys have known about it. The big thing here on Amazon, why I still love it, what really got my interest again at the end of the day here. Honestly, it might have even been a buying opportunity if you don't have any. So if you look at Amazon, we're going to go to the weekly real quick. You are still holding your pre-COVID highs. This is right when COVID happened. Your local highs here, 109, 109.5, really 109.3 to be exact. And you can see right here on the daily, we come back into this chart, look at the candle, you come down, touch, you bounce. So far, so good. Still looks really good. You get below 109, maybe you start to cut a position, trim, or mitigate your risk in some other way. But for now, you still look really good and you still look great here. Your next one, this is the only other one I got into. AMD, I like this play. I like where you held. Big fan of this here as well. Now, the things that we're watching here on AMD, I'm going to be really crystal clear here. I talked about it, during the earnings and after the earnings. I personally believe, my opinion, that they want to push to $100 and they want to get back above. AMD has been moving good. Don't get me wrong. It's had a nice bounce at the beginning of the year. We've seen the AI craze really take into effect. We've seen new investments coming into AMD from Microsoft. I think they're undervalued here personally. I know you're going to say PE ratio. I'll pray for your PE ratio. But again, this is just an opinion. I think it was a riskier play though, 100%. The safest thing is waiting till you get above 100. If you get above 100, I think you have room to 110 as well. But I just wanted a little bit more exposure to the upside here on something like AMD. Since all I really have in the market was Amazon, and I just wanted a little bit more here. You can also see that you're trying, and you did kind of hold above this level here as well. Try to bring that in really quick. It's a little bit lower. It's right there. It's a little bit lower. I'm not going to get it exact right now. But you can see here on the daily that you did end up holding above that area as well right there. And that's what I'm watching. And so I did like that as well on AMD. Again, AMD, a little bit of a more risky position. I have plenty of time on it, so I'm not really concerned. But that's my 2 plays. That's where I'm sitting at still. If you come out, Monday morning, with more debt ceiling postponement, some more downside, and you get back into this ascending triangle, I think it's possible this could become a bull trap. I think it's 100% possible. But until then, as long as you're above this range, I still like it. I'm going to tell you right now, I still like it as long as you're above this range. You still look good. ES, you're consolidating. Buyers continue to hold you up here. Not terrible, not the worst thing ever. That's my opinion. That's what I'm looking at. If you have questions, comment down below. Have a good one, traders.